Well, I think you're seeing progressive improvement anyway in terms of battery technology and in general, the whole electrical propulsion system. So we're seeing massive improvements now with the electric motors themselves. We're seeing improvements with the inverter modules that coexist with those motors and technologies such as silicon carbide, which is driving even more improvements. And then we're seeing battery chemistry improve as well. So energy density within the batteries itself, that's really the key. My personal opinion is that solid state is still some years off. But of course, we're involved in the research and development around that. But I think there's many more incremental benefits that we're going to see with the current electrical propulsion systems that is just going to continue to drive performance. And remember, if we compare electrical propulsion with internal combustion, then the efficiency of an internal combustion engine is roughly 35%. The efficiency of an electrical propulsion system is over 90%. So we're already making fantastic headway in terms of energy efficiency.
Jim, it's Karen jumping in. I just want to pick up on that story around better margins thanks to falling lithium prices. How much visibility do you have around that story at this stage?
Yeah, pretty good. I mean, we keep very close to that. Of course, that spiked the late part of 22 and the early part of 23. That's now came back down, which is good. But we have good visibility on where we think that's going to trend going forward. And that's why we've given guidance as well. So we saw our BEV margins, for example, increase threefold quarter over quarter. So we're at 3% going to 9%. And we expect that trend to continue. As we see the cost of raw materials, not just lithium, but the cost of other raw materials starting to come down, as well as our own internal efficiency gains. So much brighter future than on the lithium front, at least, than we saw a few quarters ago.
Jim, just getting into the weeds a bit more on the cost side, I notice here that you've mentioned that costs for freight and other logistics have also eased, but we know that the oil price has been bumpy in recent weeks thanks to the conflict in the Middle East. What are your concerns when it comes to some of those transportation costs at this stage?
Yeah, I think, the last couple of years, I guess, has shown us there will always be some level of turbulence and there will always be some level of headwind that you need to face. And that's why we're trying to build resilience into the business, pretty much at every turn. So we've dealt with the COVID pandemic. No one saw that come. That was very disruptive. We had semiconductor shortages. Again, that was disruptive. This awful war in the Ukraine, of course, spiked a lot of the raw material prices, and now we've got the conflict in the Middle East. Again, a terrible humanitarian situation that we hope can be resolved really quickly. And it's another headwind in terms of the oil prices that we'll simply need to just deal with. So I think you need to be constantly building resilience into the business on the understanding that there's likely to be turbulence, which is hard to predict.
Jim, I kind of want us to do two questions in one because I know you've got a hard out in about a minute's time as well. In terms of the outlook at the moment, there seems to be a lot of concerns about pricing, about the overall levels of sales, but also want to just chuck in there a little bit about China as well. If you just give us a round robin on the latter as well.
Sure. So we've saw really strong demand for our products across the board in terms of across all of the portfolio of products that we have, but perhaps more importantly across our geographical footprint where we actually sell cars in every market. So it's a very robust outlook for us. We're very pleased with that, of course, and that's allowed us to maintain our price discipline. The other thing is we're a premium car manufacturer. So in that sense, we're not in that mass market space where there is a lot more competitive and price cutting than we see in the premium side. So we're a little bit protected on that side. And I think specifically as you allude to China, I think a lot of the real competition in China is at that lower end of the market, that mass market space. But as I say, we're fortunate in the position that we're in that premium market, which we see less turbulence.